Going on, lads?
Hi mate, how are you?
Good, you?
Yeah, not bad, not bad.
Yes. Here he is. Paulie. You there?
Yo,
Paul.
mate. Yeah, I'm here. Just
Good.
didn't want you to have to listen to YouTube.
That's YouTube. What are you doing on YouTube?
All the kids are watching
Uh,
some shitty program.
Fair enough. Fair enough.
I know that feeling, mate. I know that feeling well.
Pop a message in the group.
Get busy. Put some dirt in me. Let me up.
Ooh, it's a pullback on Euro, isn't it? Jesus.
I was just looking at that. Bloody, yeah, been waiting for that 2 days.
Right. Get that in the group. Share this chart. All right, Sam. All right, Lenny. All right, KB.
Hello.
Fell asleep today whilst having my beard done. When we came out of that, we basically went for a load of food, went for some Greek food, and there's this little. I took my son to it's arcade. It's half term obviously this week, so I took him to we got an arcade in Swindon, which is like one of these free to play arcades. Like you pay like a 10 or 12 quid, whatever it is, and you basically can just play on all the games instead of putting money in the machine. You just play on them all. It's pretty cool to be fair. And then there's a little like food court next to it, and they've got these cool little like pop up, like boutique like one man band little shops. They're in like little shipping containers. So we had some like Greek food and some sushi, and then we went for pudding afterwards, and just ate so much food, so much food. And I went for my haircut straight after. And then I was just sat in the chair with my beard done. And I woke up snoring. Luckily, I know the geezer pretty well. I did warn him. I said I've just had two massive pancakes. And I'm gonna definitely 100% fall asleep. Don't know what it is. It's been like when they put your head back and there's something to do with the buzzing. I don't know whether it's because it's white noise or something, but the buzzing just like sends me to sleep. Anyway,
It is. It's nice though when you're sitting there and someone's doing your hair or whatever,
the
and then
blowjob helps too as well.
yeah, it does help. Happy ending always helps.
Um, right, lads, what are we saying then? We're going to do a quick fire one today. Q&A. Over to you guys. What questions do you have for me, and how can I answer them? Whilst you're thinking of the questions, I love how you guys always turn up to these Q&A sessions with no questions for me. It's really, really conducive to a good Q&A session, so appreciate it. Whilst you're thinking of these fantastic questions that I know you will have, I did want to just spend a little bit of time talking about this little section of price that we were discussing yesterday. So I'll be honest, I haven't actually read your answers yet because they're Lenny, thank you. You put them in a thread for me, but it did mean that it meant that I could breeze over it when I was looking at other stuff. So I am yet to go through the answers. But let me give you my feedback on it first and why I think it was, a really important section of price for us to ultimately look at and consider. So this is where, look, on face value, this looks like fantastic market conditions, right? This is where it can actually be, sometimes a little bit difficult to get into those, perfect trades. What looks like a great trade opportunity can sometimes be really difficult to get into it. And this is where we have to, use our logic and our theory to make sure that we are, we're trading in line with our momentum ultimately. So if we just jump up to the hourly time frame for now, okay? One thing we've got to consider, God, this chart needs tidying up. Apologies, guys. One thing we need to consider is obviously momentum, right? So, if we look at our momentum swings, these are our momentum swings. This is the hourly time frame. So, if we're looking at this section here, then we've got this swing up here. Okay, that's our last kind of bullish push, which means ultimately on our hourly time frame, that swing low to that swing high is our last hourly range. Okay. Now, within here, whilst we do shift bearish, we do only shift bearish until that low is broken. So this low gives us our first break on the hourly. Okay, that gives us our first break on the hourly. And then what happens is after that first break, we get a true break here. Now, this puts us in, slightly difficult trading conditions because although we have shifted bearish, we obviously understand that there's an overall bullish momentum, right? But what we need to remember is that as liquidity-based traders who trade the ranges and the momentum of the marketplace, we always need to focus on what's happening right now because you're day traders, okay? You're going into the marketplace today and you're coming out usually the same day, which means what it's going to do 2 weeks from now, with the greatest of respects, whilst we do obviously talk a lot about higher time frame narrative, with the greatest of respects, what the market's going to do in 2 weeks from now is somewhat irrelevant for us, okay? It's something that we keep an eye on, but we don't trade those macro higher time frame views necessarily. We're trading the lower time frame momentum. So the way that we can really confirm this is obviously with our hourly time frames. We now have got a clear and confirmed hourly shift. Okay. So we must understand that from this point forward, the expectation is that the market's going to continue bearish. When can we then decide that what do we need for the market to tell us that we are going to shift bullish? What do we need?
FBTB.
Yeah, we need a momentum shift, right? Back on the hourly time frame. So once the momentum has shifted bearish in this example, the hourly time frame is now bearish, and therefore you should be looking for sell opportunities. The market might right now then decide that it wants to shift, and that's absolutely fine. But you don't need, so that would be our FB on the hourly, okay? That would be our TB on the hourly, okay? But you don't need to assume that it's going to do that, and we shouldn't be expecting it to do that either, because expectation is where you're going to lose your money in the marketplaces. It's a classic newbie trader mistake. Expecting the market to do something will 9 times out of 10 cost you money. Right now, this market is bearish. Okay, so we should be assuming that the market is going bearish. Now, when we then go in to look at the price action from yesterday, what we need to look at is we need to look at our now medium time frame range. So we'll drop down something like the 5 minute, and then we'll start looking at all the ranges. This is all internal. Okay, we start looking at all the ranges that have been created, okay, to understand where we might be sitting on, say, the 15-minute time frame, which, as I've marked up for you already here, okay, we are at this point where we were looking at this buy, we were bearish overall, okay? So we now know that we have both our 1 hour time frame and our 15-minute time frame in line. So whilst a lot of us caught this trade bullish, and I'm not going to say it was a bad trade because it wasn't a bad trade, but we were too focused in on the fact that we wanted everyone who took this trade yesterday, or most of us anyway, at least the majority of us, wanted the market to go bullish. Would you say that's fair? Yeah. Okay. We were all expecting that because we'd taken out that external liquidity point, we were all expecting a momentum shift. We were all expecting longs. And remember, as we've just said, expectation is what's going to cost you money. It's death to traders. I'll think of a clever phrase for it at some point. But expectation is a way for you to lose your trading accounts. Okay. Now, there's nothing wrong with this trade necessarily. However, it is actually a very high risk and low probability trade. Why is this a high risk and a low probability trade? Who can tell me?
You're going against momentum, and your profit target isn't that high.
You're going against momentum. Your trade is ultimately limited by the fact that we're in a bearish range. Yeah. And what do we always say about premium and discount and when we can trade against it and when we can't trade against it?
It's already pulled back to the EQ.
It's already past the EQ equilibrium level. And so what time frames can we trade against it? So with regards to ranges, what time frames can we trade against momentum and what time frames should we not trade against momentum?
Against on the 4 hour.
Yeah, so hourly ranges, as long as they're large enough and there's enough structure within it, hourly ranges, you are welcome to trade against the momentum, okay? Because there's normally, if we're looking at an hourly range, okay, you've probably got loads of room where market can shift, okay? And before it even gets into equilibrium or maybe a EPA level, okay, you've got plenty of room for you to get into a trade and get 2, 3, 4, 5 R out on an hourly range, okay? On a 15-minute range, what you'll usually find is on a 15-minute range is that those shifts, they take a, they based upon the fact that we're day traders, the shifts normally happen on or around the equilibrium level. So by the time you're actually getting into a trade, you're very limited by what you can get in. Now, obviously, there's going to be exceptions to that rule. And if you do find a large 15-minute range that gives you a nice reversal on a lower time frame, blah, 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 obviously, there's going to be exceptions to that rule. But generally, based upon my testing and my finding, the 15-minute ranges won't give you enough room to maneuver unless you're trading a very lower time frame reversal. Like maybe, I mean, even if we go to the 1 minute here, look, guys, okay, and argue that that's FB, that's TB. So this is then higher time frame MSU. Okay, and if we do a nice tight stop, even with that trade there, we only just get 2R, okay, before we reach that equilibrium level. Now, price may continue up, like in this example, price may continue up and give us a lovely, 6R trade. Fantastic. And if you want to take that risk, you're welcome to take that risk. However, the more logical trade was when we swept that liquidity, created momentum, created MSU outside our trading window, unfortunately, but then the sell down here, okay, was the safe trade that had a trap entry that we could trade into. Trap responds, rejects, breaks through. Now, look, unfortunately, that's at 4:30. That would need to be something that you would have to scratch your head and say, do I want to take this risk? Am I wanting to trade, into that? But when you're looking at all of the factors that we've just discussed, hourly momentum is bearish. We've just rejected higher time frame liquidity levels to the left. You look to the left, I think there was like a daily level or something in there. Yeah, so we've got that daily level here that we've swept. Okay, we've got divergence with a DXY, which is what we discussed on Monday. Remember, we discussed that divergence because DXY had taken the low, if you remember, down here to here. I've deleted it now, but it's here to here. So DXY had created that divergence. It had taken the low, whereas EU had failed to do so. And we mentioned this. I know Sam and I discussed this when we did our Sunday markup, and I mentioned this in Monday's markup for you guys. That is an area where, divergence is something that we can assume the market might be shifting structure. So you factor all of these confluences in, this trade now becomes a perfectly reasonable trade. So yes, it's outside the trading window, but funnily enough, I had a conversation with some of the newer guys and we did one of our sessions over the weekend. I think on Monday, one of the guys, Sean, we were talking about ranges. One of the guys, Sean, said, why can't we trade in the gap between London and New York? And I was just like, well, because we just don't trade. It's low volume, blah, blah, blah. And I was sat there today kind of scratching my head and I was thinking, do you know what? Why don't we? Why don't we trade outside the trading windows? Why can't we trade? Well, I kind of came to a bit of a revelation. And this is what I love about the community and the group, because it prompts me to continually ask questions, and it prompts me to make sure that I'm always focusing and refining and providing you with the best education. So I've come up with a bit of an amendment to the sessions rule that I'm going to be testing and playing around with. And it's this. The focus and the priority needs to always be on the sessions, right? London Open, New York Open, for the obvious reasons, okay? Why do we want to focus on those sections, those times in the day? Why?
Volatility.
Yeah, volatility. Okay, volume's going to come into the marketplace. What are we most likely to get in those zones?
Liquidity sweeps.
Yeah, liquidity sweeps, and therefore
Momentum shifts.
momentum shifts. Yeah, okay, reversals, momentum shifts. That's effectively what we're more likely to get than any other point in the day. Okay, and Sean, like I said, one of the guys asked me, why don't we trade? Why can't we? We were looking at a trade, and I said we had a trade on the chart, and I said, oh, we can't trade that trade because it's outside the. And he was like, why? And I've been thinking about it since that question, because I've always just not traded those zones, right? And actually, when I sat there and thought about it, I thought, you know what? Actually, why can't we trade? If the setup is good, the reason why we don't trade in those zones is what? It's the opposite of what Danny said. Matt, why don't we trade? If we have volume at those zones, why don't we trade outside of the zones?
Well, because
Because lack of
it
volume,
doesn't
right?
move. There's
And
no
lack
volume, and it feels like it's open to manipulation when the
yeah,
volume does come back.
exactly. Yeah, definitely. So liquidity will be building up, and that's definitely a consideration. But if you do get a move that grabs liquidity and gives you a reversal, then why can't you take that trade? There should be nothing stopping you, right? And so I think whilst we will always focus on our trading zones, if you find a perfectly good looking setup outside of the zones and you feel like you've got all of the confluences that you need in order to take that trade, then I don't think it's necessarily a bad thing to do. I think it's something you definitely need to keep an eye on. And you definitely need to make sure that it is a really A grade setup. It can't just be like an average piece of shit looking setup, right? It's got to be a really good looking setup. But if a setup comes up, like this is a good example. First break with a lovely momentum shift on the 1 minute time frame, MSU, that to me, your classic, you've got all your time frames lined up, so you can trade the FB shift, right? FB failure, FB failed to make a new high, MSU, you've got a 1 minute shift here, as you can see. That's a trade that you should be able to take, even though it's slightly outside of your zone. Now, whether or not you want to be trading outside of those zones is really up to you. That's your own prerogative. And the focus will always be on the trading time zones. But this day's a good example where there's a liquidity sweep here, nice breakdown, MSU setup. Why couldn't you take that trade? Well, look, I don't want you guys to feel like you can't trade out of those zones. Just be prepared for the fact that you could be swept, like Euro JPY was a good example today. So Euro JPY, first position, I take this off. Okay. First position was taken outside of the zone. Perfectly good setup. That was then swept by the New York liquidity. And that's always going to be a risk when you're trading outside of trade time frame, is that you're going to get into a position that ultimately is going to potentially get swept. So you've got to, and that's what I mean by taking a calculated risk. You've got to decide whether or not you're going to take that trade. Because the smart trader maybe would say, well, actually, if I just waited until New York, I would still be in that trade with a better stop loss, with a better position. The better entries are always going to be in your key time of days, in your kill zones, right? That's where you're always going to find the better trades. But I also don't want to vilify you guys trading if you see an absolutely perfect setup. I don't want to vilify those trades, in those situations. Okay, so slight amendment. It's important that as traders we do learn and adapt. I'll be keeping an eye on them, seeing whether they return any opportunities. I'll be logging this trade. I'll be marking up the fact that it was taken outside of a key time of day, and then I'll be reviewing that data in a few months' time to see A, how many trades that I got, and B, out of the trades that I did get, whether or not I had an edge. Because if I'm losing more than 50% of those trades, then it maybe is just something that I go back to saying, do you know what? Actually, yes, you can trade them, but my assessment is that it doesn't warrant, the sacrifice of my psychology, my win rate, and my frustration in the marketplace. Maybe it doesn't justify actually taking those positions. Okay. So
Yeah. How
yes.
many you record the times of your trades anyway, don't you? So you can just
Yeah.
go back and check, see which ones are outside.
Yeah, and do you know what? Interestingly, on none of the trades we looked at this last night, Monday night, none of the trades that I've taken have been outside of my key times of day. Zero. And that's
interesting.
a log that I've been keeping for since the start of the year.
I
Zero.
thought you would have took some like just outside a London session the odd time, huh?
No, I haven't.
Maybe not.
But again, look, it's one of my checklist points. Am I in a key time of day? So maybe I'm just filtering them out without realizing it. It's one of those things. So yeah, so look, coming back to our buy on Euro USD on Wednesday, which I didn't take because I was doing what I thought was the smart play. Okay. I was trying to sell Euro USD. It obviously had other ideas, took me out, stopped me out, and then the market then gave us a shift up here. For my trade, in hindsight, we were very low. What I looked at is the fact that we had tagged equilibrium. I think I took a trade maybe here after I had this 1 minute shift. So I was looking to take a trade probably a little bit early, to be fair. And this one of the things I've noticed on EU recently is that it's really big on pulling back into the premium pricing. It really enjoys it. I've noticed this. Don't know why, because sometimes, as you know, with EU, it can be really, really impulsive. But at the moment, it seems to be quite a big fan of creating a big push and then having this really corrective pullback. It's literally done it just today as well. Really big push, really corrective pullback into that premium pricing. Okay, it's one of the things to keep an eye on. Now, there's a few reasons that that could be happening. If we look at our very high time frame, talking about our weekly, are we potentially trading right now against the momentum? Because we've had these two massive big weekly bullish candles. So are we trading against the kind of the macro momentum? Because the dollar's dropping and therefore Euro USD wants to climb? I don't know. And I don't think we need to go into that in depth. But it would make sense, right? If the market is trying to go bullish, but the momentum is currently bearish, it makes sense that that would be the reason why the market continually pulls back quite a lot at the moment. Whereas when it's been bullish, okay, you have had these moves where it's pushed off, it's had a little bit of a pullback carried on. We've another couple of examples. Yeah, it's like this, pushed off, a little bit of a pullback carried on. Or maybe it's just, one of those things where, maybe I'm overthinking it, overcomplicating it. I don't know. But certainly my sell on Tuesday was too early. My sell on Wednesday was too early. Unfortunately, that was my loss. And then I missed out on the buy up here, which would have been, the trade that I probably would have taken. But I was definitely heavily influenced by, the fact that I was expecting a buy, and I got very convinced by that FB and that TB. I know that Sam and I had a conversation. Sam ended up coming back to break even. Sam was holding for a higher profit, and me and Sam had a conversation about that. And we're saying, well, actually, when you look at it on reflection, it's a bearish range, right? So Sam really probably should have taken most, if not all, of his profit out at that level, because that's what his trade was ultimately limited by. And the smart trade that we should have all got involved with was this one. Okay, you can see that really clear rejection as well. Really clear rejection from that FB level, and a nice little breakdown. One of the things that I want to start just playing around with over the next few months as well is a new entry model. When we have trades in line with momentum and we have range sweeps, how successful just trading the rejection of the sweep is without waiting for an MSU. So this is one of the projects that I've got on. I'm launching the prop firm blueprint over the next couple of months, and then we'll be bringing in the next batch of bootcamp students around April, May time. And then in my project for the summer is just to see whether we can capitalize on these momentum moves. For example, this move here on Euro USD today, very little opportunity to get involved with it. However, if we had just traded the rejection of that 15-minute liquidity, and traded effectively the IFVG, just traded that, we would have got ourselves into a really, really nice position. The problem with that style of trading, and the reason why our style of trading is much higher profit and a much higher win rate, is without that confirmation, what are you going to get more of?
Losses.
Yeah, false entries, right? False entries, trades that look like they're going without you, and then getting swept out. So it needs to have a high enough probability. Sorry, it needs to have a high enough win rate and a high enough risk to reward to justify it. And what I don't really look forward to is that if it has a negative win rate, as in it loses more than it wins, but it gives you like a 4R average return, that to me doesn't feel great. And that's what I think we'll probably get. I think you'll be able to get, maybe 4, 5, 6R trades quite regularly, but the trade-off is that you're going to have a negative win rate, and that's something that I want to play around with for you guys and see what we can work out. as you know, I'm always going to continue developing and building this strategy, and however I can improve it for you, I will do, even if it's a case of I can give you an extra trading model to use ultimately. For now, our confirmation trades like this, yes, they might not be as flashy as some of the 6R trades that you see when people don't trade with any confirmation, but they're effective, right? Okay. And we know they're effective with lots of confirmation and lots of reassurance for you as a trader. So yeah, that's been my last couple of days, really. Hopefully that's been helpful, guys.
Yeah.
Any questions at all for me today? We've got a few minutes left before I've got to jump over into the boot camp.
Well, I've got a really quick one, and it will just be really quick, I think. When you're trading Euro JPY, are there any complement pairs with that, or is that just are you just
Yeah,
trading that as you see it?
Euro USD and USD JPY.
I've
Problem
got a
with it
quick
is you've got two
question.
pairs, two very strong pairs that are influencing it. So if Euro USD is moving bullish, therefore USD JPY should be moving bearish. You can normally work out which is the stronger by what Euro JPY is doing. So if Euro USD is moving bullish and USD JPY is moving bearish, but Euro JPY is also moving bullish, then you know that the euro is in charge effectively.
Okay.
Okay.
Yeah.
What that means is that when the Euro USD reaches an area of maybe consolidation or a liquidity point of some kind, then you may find that USD JPY will then be able to take over. And so let's say Euro USD is at liquidity, starts consolidating, not really moving that well, but USD JPY continues to move bearish, then you'll find that it will pull Euro JPY back down.
Would you correlate EJ and CJ together?
I would make sure that I had another JPY pair in that orientation. So CJ, GJ, whatever it may be, in that orientation. CJ is not a bad shout because you could argue that the CAD is slightly weaker than both the euro and the USD. Sorry, the euro and the JPY. You can argue that. It's difficult. The problem is you can get so lost in correlation you can get so lost in the correlation of pairs. And that's one of the tough things to really swallow, is that sometimes you can just really overcomplicate your trading. And I worry that sometimes we do. One of the conversations me and Sam have had quite a few times recently is, we obviously like to use our monthly, our weeklies, and our dailies, but do we need anything more than the 4 hour? I think we do. But there's definitely a compromise to be made, and I want to make sure that we are, not overcomplicating things. The theory side of our trading strategy is as complicated as it needs to be already without overcomplicating things. So it's a really difficult one, Matt and Danny. It's a really difficult one to say, what you should or shouldn't be doing. Really, realistically, the price action on the chart should be sufficient enough for you to be able to find the trade that you're looking for. Because think about it this way,
Yeah,
right?
that's fine. That's great for me. Nice and simple. I was just thinking, like, you've got, the dollar against Euro USD. Like, is there
The
anything there
reason
that?
why the DXY, so you can use the JPY basket. So you can search for the JPY basket, and that is the same as what the DXY is. So that's
Yeah.
like CJ, GJ, EJ, UJ all in one basket at once. Just the JPY half of it all in one chart. So I think it is literally
APYX it's called.
JPYX, is it? Yeah. Okay. The problem is it's really ugly. Okay, so that is raw. That is, yeah, JPY currency index. That is raw yen price action. So if this is moving up, let's just see, right? So this is the 5 minute chart. Okay, we had a false break there. That's at 2:05 a.m. Is that right? 8 p.m. Yeah, 2:05 a.m. Okay, and then we go to USD JPY. It's obviously the opposite, just like DXY. 2:05 a.m. Okay, so we get it there. Here, 2:05 a.m. We also get it there. This is not a good example. We also get it there by the looks of it. Yeah, we do. Okay, let's try and find a different one. X. Okay, what happens at 8:35? So 8:35. False break. Let's look at CJ. 8:35. Okay, so on CJ, 8:35 this morning, you had it creating lower lows. Okay. On the JPYX, you had it creating a lower high. Obviously, you've got to inverse it, right? So what this gives us is it gives us that divergence. We see a liquidity grab on the yen basket, okay, which we don't see on CJ, which gives us an indication that CJ might be dropping. EJ gives us the sweep, and UJ gives us the sweep and then some, but CJ doesn't. CJ then breaks down, gives us a very lovely 5-minute MSU. Trade comes in outside of our trading zone. We're breaking all of our fucking rules today. Trade comes in outside of our trading zone, okay, and we hold it for a lovely 3-hour trade. So yes, there's always going to be confluences that we can use on these pairs and these charts. Maybe if you are trading JPY, maybe you have a look at the yen basket. But like I said, you can run the risk of overcomplicating it. I use the DXY because I trade Euro USD so heavily, and that's just so similar to each other, right? The trades that we should all be taking, remember, the trades that we should all be taking are those clear, clean, and obvious trades that just simply cannot be argued with. And if you are trading one of those positions, this is what I think. If you have to use another pair to decide whether or not you should be taking a trade, then your trade probably isn't ready. And you know what? If you wait for that next break of structure or that next true break in line with your trade, and then you get in slightly later, that's probably a safer bet than you using another pair to tell you whether or not you should be entering. That's that greed, really, that greed of you trying to get in the highest possible or lowest possible position to get the tightest possible entry and the best possible trading outcome, which is nothing wrong with that. But right now, we just want to be looking at the very best, the very clean setups that really and simply just cannot be argued with. All right.
Yeah, that makes sense.
But yeah, I mean, look, we looked at the divergence here on CJ. You could have compared it with EJ today, and you would have seen that there was a divergence, and that could have influenced you just the same, right? Because you had it here. You had a higher high here, but you had a lower low there. So that gives us a divergence. I would always have a couple of, like at least one other pair on there that I would keep an eye on. Always, 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 always. You know, if I'm trading Aussie CAD, for example, when I was looking at Aussie CAD yesterday after the CAD news came in, I was constantly flipping back to CAD JPY and making sure that I definitely lost my trade. Just making sure that 100% made sure that trade lost. And that's what I was doing yesterday. So it definitely helped me yesterday. Yeah, anyway. Right. Thank you for turning up, guys. Appreciate you all as always. Hopefully that's been beneficial today. Momentum is king, right? Momentum is king. Trade in line with that momentum. Hourly ranges are your higher time frame momentum on a day trading basis. 15-minute ranges, and to come back to our point on Euro USD, just to kind of come full circle. There's nothing stopping us from eventually taking a buy on Euro USD. But in order for us to take a buy on Euro USD, our timeframes have to line up in order with each other. Okay? So for us, we needed to trade in line with the momentum, which meant we needed the 15-minute to shift. And if the 15-minute had shifted, then that could have given us a trade. What we don't really want to be doing, ideally, is your two timeframes that are next to each other. So I'm talking like the 1 minute and the 15-minute. Okay, so in terms of low, medium, and high, let's say for argument's sake, you've got 4 hour, 15-minute, and 1 minute, just to keep the numbers easy, right? Okay. What we're actually referring to is 1 to 5, 15 to 30, and 1 hour to 4 hour, because they're all in a category. They're all in their own categories, right? Hourly, tens of minutes and then ones of minutes. That's probably the simplest way to categorize them. Okay. If your 15-minute time frame is bearish, you don't really want to be trading a 1 to 5 minute shift. Okay, because you're trading against the 15-minute. Okay. If your 4-hour is bearish, you don't really want to be trading a 15-minute shift, because by the time that those shifts have happened, you're probably at those equilibrium levels. Okay. However, if you have distance between them, i.e., if you're in a 4-hour range and you have a 5-minute shift, then that's probably going to give you enough room to trade up to that equilibrium level. Where you have to then question whether or not you want to take that trade is if your 4-hour is bearish and your 1 minute's just shifted bullish, what's your 15-minute likely to be? So 4-hour is bearish, 1 minute has just
Bearish.
exactly right, because the 1 minute has just transferred to bullish, which means that before it's shifted bullish, it was bearish, and that bearish momentum has probably come for the 15 minutes. So the only real safe way to play this is waiting for these time frames to line up. Okay, if your time frames aren't aligned, then possibly just hold fire, because this is a good example on Euro USD. Let's say none of us were focusing on that buy, none of us were expecting the momentum shift, and we were just looking for a sell. You would have just waited until that FB had been swept, and you might have taken that calculated risk to get in after your trading zone, and you would have ultimately got yourself a much better trade that you could have been in and held a position all the way down to 11R by the close of play today. Okay, because if you're trading in line with momentum, you put yourself in the strongest possible position for that trade to not only hit your first target, but also your final targets and then some. Because if you're trading in line with the momentum and you catch that trade correctly, it should keep going. Okay, it should keep going. So I want a real big focus for all of us, really, myself included, real big focus on just concentrating on those momentums, understanding where the momentum is flowing, just trading alongside it. Because if the 15-minute shifts bullish, we might then have opportunities to go bullish. But the 15-minute needs to shift bullish, and we also then need the 1 minute to shift bullish as well, right? Okay, because then if that happens, then we can trade the 15-minute up, and potentially then we might get an hourly shift. And now all of our time frames are in line with each other. And now we're in a really strong position. So I think, common sense prevails. You look at this marketplace now, and if someone said to you, should I be taking buys right now? Every single one of you would answer no, right? Fair to say? Every single one of you. Yeah, all of us were looking at that trade yesterday. And look, it wasn't a bad trade. But it wasn't a bad trade because it took the external liquidity. If it had reversed at that equilibrium, every single one of us would be kicking ourselves, right? We'd be like, oh, for fuck's sake, should never have taken that trade. So it's quite funny, like the power of community and how we all can kind of support our own stupidity sometimes. But look, this is the testing part of it, right? And this is where hopefully these lessons are really, really beneficial for you guys to really solidify that information. And look, fucking 10 years on, guys, I'm still making stupid mistakes. I missed the buy and I took a sell too low. Look, you're going to make mistakes forever, I think, unless I'm just an anomaly. But from what I understand from every other trade that I know, you'll just have periods of time where you just fucking do stupid shit and you end up blowing an account or you end up losing 2%. That's what I lost yesterday. I lost 2% yesterday. And it was sickening. I hated it. I fucking hate having losing days, especially 2 losing trades in a row. Oh, it drives me mad. So I had to just walk. That's why I didn't take Euro USD. Sam, I was talking to you about it, wasn't I? Just like, I wasn't ranting and raving, but I was ranting and raving. Anyway, I wasn't really. I'm kind of numb to it these days. I'm completely desensitized. It just doesn't faze me anymore. I just mainly just cut myself. I don't do that. Or do I? Anyway, I keep forgetting we record these sessions and people might watch them back and be like, what the fuck is this guy? Anyway, right, I've really got to go because I'm late as per usual. Apologies. Right, next session. Okay, cool. So everyone that's here, you guys are pretty good with it, but I want to see more end of day markups. Every single one of you today, end of day markup today. Okay. Who's going to be on the Saturday end of week markup? Who's going to be on it? Danny,
Yeah, I'll be there. Yeah.
Matt, right, perfect. Matt, you've nominated yourself. You're hosting the Saturday end of week markup. All right. And we're gonna be trading your strategy on Saturday, and Danny is doing Sunday. I'll obviously do some of the sessions as well. Every other weekend now. I think that's going to be a good way to do it. Every other weekend now, you guys are going to be hosting the end of week markups, and we're going to get you into that routine and also get you into the routine of just marking up the charts, in a situation, in a more pressured situation, and also hold you accountable for doing it. So next week then, so Saturday, Matt, it's going to be quite interesting how many people turn up in 2 weeks' time. I'll log on and be like this. No one's fucking here. It's just me and Sam. Just twiddling our penises. Not really. We don't do that. Or do we? Right, I've got to go. Bye. Cheers, guys. Speak soon. Bye bye bye.
Yeah. Bye 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 bye.